Hello and welcome to our catch up with Sean Burns, the portfolio manager of the Switzer Dividend Growth Fund. Thanks for joining us, Sean.
A pleasure, Peter.
Okay, so tell us about the performance of Switz. It's outperformed the downward market last month. What do you think drove that outperformance?
I think that's what we would like to expect to see, the way the portfolio is structured. It is in what we think less risky stocks, more defensive type stocks. So if the market is down, we would like to be down by not as much. And so that played out this way. I think materials was off a lot. REITs did better, so that mix helped the fund.
Well, Sean, there was some increased activity on the portfolio over the month of August. Talk to us about the trades made over the month.
It was results season, so there's a fair bit going on. In general, what we did, some of our stocks that we think have run too far, we've taken profits in. And so things like car sales and also Spark infrastructure, we sold them down. And we've reinvested some of that in more, and again, in defensive type stories. So a few utilities and REITs, but also some other stocks which we think were harshly treated in the results season. We have a look through them, and so we bought a little bit more Amcor and Aurora, for example.
How did the companies in the portfolio actually fare in reporting season?
I think it's always mixed, but I was fairly happy with how they came out. I was quite fearful, and I think the market was quite fearful going into the results season that we would see some pretty average results. At the end of the day, they weren't great, but they were much better than feared what they could have been. So a whole heap of companies that I think we own had good results. So we had James Hardie had a good result. The two supermarkets were very strong, so it's good. CSL, Wesfarmers and Lendlease, I think were all standouts that we own in this results season.
Some people might be surprised that you hold CSL because it's not a renowned dividend payer. Why don't you explain why you hold a stock like CSL?
I think that's true. It hasn't got a big yield. It is we do reserve a portion of the portfolio for capital gain. So most of the portfolio is in yield stocks. About 70% of the portfolio is for yield. The other 20 or 30, we look for situations where we want to make money and we want stocks that go up and add capital gain, and CSL is one of those. I mean, at some stage it'll do its job. I mean, I think it's almost up 100% since we bought it, and that goes to pay out realised profits at the end of the day. So there is a blend. There is skewed to yield, but we do have a growth or a capital gain.
So what you're saying is that you try to buy those renowned capital gain stocks when they look like they're at good prices. And that's the reason why you, in a sense, put off the desire for dividends to get that capital gain.
Yeah, there's a bit of a mix. I think that being wholly in yield stocks would get the yield up, but the growth part would fall down. So we do allocate a proportion of the portfolio, and that's exactly what we're after.
Okay. Is there anything else you think people should know who are invested in the Switz fund?
I think that the outlook is, it'll go up and down with the market a bit, but we are skewed towards quality and yield. That's the core of the portfolio, and I think those dividends, we're very confident on the dividends coming through in the companies we own. Okay,
just remind us, for the year, the financial year, what was the return for Switz?
I think the net payout was around 8% and about 11% including franking.
So it was a good year, and a lot of that was linked to, I guess, to the fact that because of the election and Bill Shorten's attack on franking credits, a lot of the big companies put out a lot of dividends, didn't they?
Yeah, they emptied the till, and we benefit from that. We unreservedly went after that franking, and all of that got passed on to the investors.
So you've become known as the great dividend hunter.
And we'll continue to be so.
Good stuff. That's Sean Burns, portfolio manager for the Switzer Dividend Growth Fund. Thanks for joining us.